Hello, traders. Gary Wagner with the Silver Forecast here. 8 a.m. in Honolulu, Hawaii, Wednesday, the 23rd day of March. And this is the Daily Report. Silver continues to trade higher today, up 76 cents. And folks, 76 cents takes us well above $37 per ounce. On this daily chart that we're looking at, we talked about this really incredible pattern. This started on Friday, and that was when we saw these double dojis right in here. We also saw that what we were forming was this three-river Morningstar variation, our long day down, our consolidating candle. In this case, we got two of them, double doji, followed by that red candle up. Gives us that complete reversal signal. It's a pattern that we've seen time and time again and always have good relevancy. When we compare the performance of silver and gold, both of them off their highs, but again, gold has increased in value 0.64, a little over 0.5%, and silver over 2% of a gain. The same thing that we saw yesterday. Now, do we have any reason to be concerned in this area? Well, we're going to take a look at our channel lines through the Andrews Pitchfork, and I think you're going to find it has landed at a very interesting place. Traders, I kid you not. This is, of course, our daily bar chart with our Andrews Pitchfork. We have been talking about the fact that we had some significant areas. Of course, that handle, we found really strong support. We talked about that on Friday. We also talked about when we first started this report back in March 7th, that was actually this candle right in here. We actually started at the top of that market right before the correction. And if you recall, what we talked about, the fact is we feel that there's going to be some resistance in this area. Lo and behold, we were correct. There was resistance in the area. Market came down, fell upon support. Now, what's so interesting is when we fast forward, of course, to today, if you take a very close look at it, we are very close, if not right on. And the only reason I say close is that this line could go up a little bit more here. But we're right within those parameters, those areas where we are again at the top of this Andrews Pitchfork. Because of that fact, my belief right now is we are in a very sensitive area, and it is going to be most prudent for us to take a look over the next couple of days to really see how the market reacts here. We are looking, even though it is only Wednesday, at our weekly chart, and you can see that's this large red candle. You can see quite a move in the market. Obviously, we took out this band or area of resistance. You see these two small bodies here. When we take a look at that correction, this is that period right in here. And it certainly seems as though we've got a bull trend back on our hands. Now, here's something interesting. Let's go ahead and convert this chart into our average chart. And obviously, it looks quite a bit different. The major thing that I notice is that that correction seems to be but a dot on the screen when we look at it from the big picture. This trend is absolutely still intact. What we noticed is the body size on these Henkin candles, of course, during that correction, that week it did shrink and is still growing in size, but not anywhere near this vertical climb that we saw over the last month and a half since the beginning of February. Traders, we want to be very careful, see how it reacts at the top of that Andrews Pitchfork. I think, as I said, we're at a very sensitive area. But we have profits in our position. We absolutely want to maintain our position, maintain our stop. This has been Gary Wagner wishing you, as always, good trading, and we'll talk to you tomorrow for another daily report. Bye-bye.